Hey everybody. Hi, my name is Darius Anucauskas and I'm the global market analyst here at Markets.com. So I hope you're all feeling fantastic. Today's Wednesday. We have an event here today happening, a very important one, which probably everybody's monitoring. And that's the Federal Reserve interest rate decision, which is coming out later on today. We did get the BOJ already as well, so the bank kind of kept the interest rates the same as previous at plus 0.5%, but now it's the Fed's turn not to do anything, basically. So, but I'll get to all that in a bit. First, before we jump any further, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendations, and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. Also, I just wanted to quickly mention our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So, right now then, I want to pick up on the economic calendar today. So yes. Today is Wednesday, and as I already mentioned, that the BOJ did deliver its interest rate decision, but now it's, like I said, it's the Federal Reserve's turn. So, the interest rate decision itself, we are expecting the rate to remain the same at plus 4.5%, so no surprises there. You can see here by the this FedWatch tool as well. I mean, it shows that we are at 99% that the rate will stay the same. But what's interesting is going to be, in my opinion, it's the press conference, because this is where the excitement could come for all the traders. What I mean by that is that we'll listen in carefully in terms of what Jerome Powell has to say and how he will sound in terms of, let's say, how many more rate cuts are we, planning to get, because previously, if you look at this, the FedWatch tool again, by the end of this year, now the percentages have shifted a little bit towards 2 cuts only, although last week we had the big probability for having 3 cuts. Now, will that be the case? Again, we'll see. Again, I keep on saying right now that, look, yes, we are monitoring everything carefully. However, still a lot of things, can change. And yes, at the moment, the prognosis, the forecast is that we could see 2 cuts. But look, if the Fed comes out worried a little bit more, they might say, you know what, we will remain careful, and we'll of course they will say probably something like data dependent, and they will continue monitoring the situation. But if they think that they need to step in, because look, the stock market has been on a down move, quite a significant one, and if they feel that they need to step in with more cuts in order to stabilize the stock market, well, they'll probably do that. Now, at the moment, like I said, they will keep the rate unchanged for this meeting, but like I said, it's the words that, how they will sound, and if they're going to sound more in favor of, going for some more cuts or not. So that's what we will be carefully looking at. And if we do see that, if we do hear those words, then I'm kind of looking forward here to seeing a larger correction here back up, because we had a decent decline. I'm looking at the S&P 500 right now here. We had a decent decline. We, look at this. We dropped. We for the year, we already dropped almost like 5%. I mean, we did drop a little bit lower at one point, but we recovered. So now we're kind of on a 5% loss for the year. Even if we do see a retracement, and if we do see like a move back up, I'm being very careful here from the technical perspective, because look, we have the I have the Fibonacci drawn here, but it's like an additional tool. It's a little bit on the subjective side, as you all understand. But this 200-day EMA is something that I'm watching very carefully. If it's going to provide, again, strong resistance, then another decline here could be possible. Similar stories with the Dow here, again, below the 200-day EMA here on the daily chart. By the way, I'm looking at dailies for now. And well, for now, I actually prefer the dailies because again, those give me a much better picture than the shorter time frame ones. And I also love looking at weekly ones. Now, coming back to the situation here. So like I said, if on the Dow here, if we, let's say, somehow, get this nice positive moment from the Fed in terms of, well, what I mean by positive, for probably positive for the bulls here, if we do see the Fed saying that, you know what, they're willing to go and cut rates and, to ready to support the economy, then we might see like this one, retracing back up a little bit here. I'm not getting way too comfortable. Even if we do push back above the 200-day EMA, I'm only going to aim for the other EMAs here initially, the 100 and the 50-day EMA, because let's not forget, if we were looking at this one on from the technical perspective, on the Dow Jones Industrial Average, we might have a test of this one of these downside lines. And specifically this downside line drawn from the high of the 20th of February, it's yes, at the moment it's a very tentative line, but nevertheless, it could be an interesting one here, and this downside line is something to be watched. Now, look, it also nicely coincides here with the EMAs, the 50 and the 100-day here, shown as the green and the blue line. So this in a way becomes quite a good target. But all this is kind of only if we do see some support, from the Federal Reserve, if they're ready to step in with more cuts, because at the moment, like I said, the Fed Watch tool is showing that we're shifting towards 2 cuts. But if somehow we shift back towards 3 cuts, this is where the excitement for the bulls could come in. But again, looking at the Dow here, there are some obstacles on the way higher. If we struggle to, let's say, to push somehow back above the 41,700 zone, and I'm looking at the cash index, yes, there is a chance for this one to slip a little bit lower, but preferably if you're looking at some lower levels, a drop below the 40,650 zone here is required. That's the lowest point, the current lowest point of March. I like to be a little bit more on the safe side, so yes, a drop below that hurdle would confirm a forthcoming lower low and potentially attracting more sellers into the game. The S&P 500, is also looking quite nice here, and it remains also, like I said, quite nice for the bears still. But hey, a bit of positivity wouldn't bother the market here, I would say. So, but even though the same story remains valid, that if you're looking at some lower levels on this one, probably the safer option is to wait for a drop. We can just get rid of this Fibonacci for now. A drop below the 5,500 zone. If we clear that area, great, more sellers could join in. NASDAQ, very quickly, just a quick glance. I mean, this one is still oscillating around the Fibonacci retracement here, around the 23.6 here. And basically it's drawn from the lowest point of 2022 towards the highest point of the current highest point of this year. And yep, this big Fibonacci retracement, we're currently trading around the 23.6 here of that Fibonacci retracement. So again, the similar story. So again, the same story. If you're looking at some lower levels, ladies and gentlemen, wait for a drop somewhere below this 19,100 zone, and then it could open the door towards that 38.2, which beautifully kind of is aligned with this near the lows of August of 2024. So, some of these key areas of support here in August. I mean, I think that it could be a nice good target, but for that we need to see a clearance of this 19,103 zone. The same story for the upside. I really prefer a push back above the 200-day EMA in order to consider some higher levels, but hey, the market doesn't always give me what I want, so that's why I'm going to go with the flow. And in general, I keep on saying to you, ladies and gentlemen, wait for the the press conference, wait for the market reaction, don't try to predict it, and everything will be fine. Looking at the dollar index very quickly here, this one's actually waiting for a moment to shine, because look, we're near this key area of support around 102.83 zone. So if we get some support, some lower numbers, some, let's say, the Fed is really willing to go for maybe 3 cuts by the end of this year, I mean, I don't think that this is going to really sparkle well here with the bulls, and I think the bears will be satisfied a little bit more. We could see a drop below this 102.83 zone. However, from the technical perspective, what I'm looking at here, from the very short-term perspective, I'm looking at the upside, but only from this 103.75 zone. That's the high of the 14th of March. Now, if we do clear clear that area, if we do clear that Friday's high, I think that the formation here would be a very nice double bottom formation, which could open the door towards slightly higher levels. I'm not saying that I'm going to go up, up and away, no, but these EMAs here could be the next potential target, because those are kind of still below this downside line. So in a way, still this whole move could be classed as a temporary correction before another possible leg of selling. So keep that in mind. So we do have some important levels to watch, so yes, be careful with that. And just touching base on a few on a forex pair here, like Euro USD is also waiting for a moment to shine. If, like I said, if the dollar weakens, we could see this one a nice going through this nice breakout of the 1.0950 territory. If we clear the 1.0950, hey, the psychological 110 is on the table here, there, and maybe even we could go towards the 1.11. Let's see. And finally, on gold, gold is right now at a spot where we are, we've tested a new all-time high today, this morning, and let's see if we can clear that, the current all-time high. I will only go higher if we start clearing the current all-time high, because whenever we're in these uncharted territories, I think that, yeah, it's better to play the safe game. For the downside, well, at this specific moment in time, while the commodity is there, I would rather say, just wait for a drop below the psychological 3000 zone. But again, we're at a very interesting moment right now. So it's, if it wouldn't be for the Fed, I would say, hey, stick exactly to that. But because there's a Fed decision today, so anything can happen. So just be careful, watch the US dollar, and then we'll go from there. So ladies and gentlemen, this was just a quick short video idea on a few instruments, and of course my view on the Federal Reserve, what could happen in a way. So hey, I hope you liked it. I hope you enjoyed this little video. Thank you very much for watching and listening. Let me know in the comments if you agree or not, or what's your take, and I will be more than happy to look into that as well. So hey, I'll see you in my next little video update. Stay tuned, sign up for Markets.com, and yeah, I'll see you later. Thank you very much, and bye-bye.